Well, Tara, the current numbers out from today's report show few signs of any relief regarding surging prices. One economist tells us that likely we're headed towards a recession, while the White House says the data released today is likely out of date.
We don't want it to get any higher because, like me, we can't afford it.
June's inflation report shows prices went up 9.1% higher compared to a year ago. That's the highest inflation rate increase since December of 1981.
We expect the headline number, which includes gas and food, to be highly elevated, mainly because gas prices were so elevated in June.
In a year, the price of oil has almost doubled, pushing gas prices up nearly 60%. Households are paying roughly 20% more to keep the lights and gas on, and the cost of going out to eat rose 12.2%. However, the White House is calling this month's report backward-looking data, pointing to a recent drop in the national average for a gallon of gas, still blaming the war in Ukraine for surging gas and food prices.
June CPI data is already out of date because energy prices have come down substantially this month and are expected to fall further. The average retail price of gas was 11% higher in June than it was in May. And the cost of gas in July is already down 7% from the June peak.
The White House releasing this statement saying the data does not reflect the full impact of nearly 30 days of decreases in gas prices. It goes on to say those savings are providing important breathing room for American families. Meanwhile, at the pump,
gasoline is just too crazy. It could literally crippled our country, especially after COVID. Nobody has money for anything, and now everything goes up higher and higher.
The report will likely keep the Federal Reserve on track to raise interest rates by 0.75% at its meeting later this month, hopeful to cool inflation. But analysts watching the markets worry raising rates too high too fast will likely push our economy into a recession.
I think now the fact that the Fed has to be more aggressive in combating it means that the likelihood of recession is probably increased.
Tough day on Wall Street as well. Today's stocks slumped shortly after the release of today's inflation report. The Dow Jones dropped 300 points within the first half hour. S&P 500 doing equally as terrible, roughly dropping and losing 0.25%. But then they finally did rally back shortly, only to drop all their earnings once again today. The Dow is down above 200 points. The S&P 500 almost 0.5 percentage point. Tara, back to you.
All right, Brody, thank you. Here with us now is E.J. Antoni, Research Fellow in the Center for Data Analysis at the Heritage Foundation. E.J., thanks for joining us tonight on Faith Nation. You've seen the numbers, obviously. Are we heading for an economic recession? Or the million-dollar question, are we in one already?
Well, Tara, thank you for having me. And I think we are already in a recession. We've already had 1 quarter of negative economic growth. Last quarter, the second quarter of this year, is most likely going to turn negative as well. So yes, we are most likely already in a recession. And this idea that the Federal Reserve needs to ease up on interest rate hikes in order to avoid that recession is just nonsense. Inflation is going to cause a recession anyway. We might as well get it over with and bring prices down in the process.
I'm sure a lot of people would agree with that. You know, we are seeing a very recent decline in gas prices that have not been reflected yet in the latest inflation report. Is it possible there is a lag in this report and that we've actually hit the peak?
Well, there is some lag, but apparently no one at the White House actually knows how these reports are calculated, because the Bureau of Labor Statistics, what they do is 3 times during the month, once in the beginning, once in the middle, and once at the end, will conduct surveys to gather the data that goes into these numbers. So the last of those 3 surveys actually does capture some of the decrease in gasoline, although certainly not all of it. But whether or not that's the case, it still does not erase the fact that there are tremendous costs that businesses have been bearing that have not yet been passed on to consumers, but will be in the coming months. So this is far from over.
Yeah, and we've mentioned interest rates. How likely is this report to actually keep the feds on track to raise the interest rates? And it sounds like you don't actually think the rate hikes are working.
Well, it's not so much that they're not working, but the Federal Reserve waited far too long and has taken far too small of steps in terms of dealing with this inflation. The time to raise rates was over a year ago when they had the first indications that inflation was becoming a problem. Instead, they dawdled and spent time worrying about things like climate change and diversity and other left-wing talking points that they have no business getting involved in.
And finally, what should Americans be doing? We're all asking ourselves this to confront these high prices. What can we do?
Well, unfortunately, because inflation is a tax, a hidden tax, but still a tax, there really is nothing you can do to completely protect yourself from it. The only thing that you can do to truly protect yourself from inflation would be to remove the policies that are causing it. And that is going to require change in the federal government.
All right, a hard road ahead. EJ, thank you so much for joining us this afternoon.
Tara, thank you for having me.